what retirement investment strategies work? Do the old strategies still work? Or is there a new way that we should be implementing retirement investment strategies that will make it more likely that we don't run out of money in our lifetime? That's what I'm going to share with you and talk about. In this video, I'm going to share with you what we learned on our adventure, which began around age 50, when we were at a really uncertain financial place, and we moved to financial independence using both traditional investments like stocks and bonds, along with alternative retirement strategies that are usually ignored in mainstream or traditional retirement planning. Okay, so let me say that there have been a lot of changes over the years, as I write about at my website, retirecertain.com, from the old way that retirement worked to the new way. We've got so many things going on now that really had to, that demanded a shift, right? We've got longer lifespans. We've got so many companies that don't even have retirement accounts. We've got pensions are becoming rare, rising healthcare costs. We're in a time of unprecedented low interest rates. It used to be retirees could rely on fixed income, that bond income in retirement, and all that's changed with these crazy low interest rates. So I'm going to address in this video 5 things that I really want you to be aware of. I'm saving something super important for last, so make sure you stay tuned to the end. If you like this type of information, subscribe to my channel and click that little bell so you'll know when I post a new video. All right, so the very first shift that I touched on already is simply we used to be dependent on someone else for retirement, right? That's kind of the culture that's in our mindset. I mean, I think of my my great uncle. My grandfathers died when I was very young, but all my grandparents did. But my great uncle, I always think of him. He worked for a major oil company, and when he retired, he had his retirement account, and then he died when he was about, I don't know, 75. It wasn't that many years after he retired, and he and my great Aunt B, that was her real name, were taken care of because he had stayed with that company for so many years, for decades, and they took care of him. And back then, it was like the employers took care of you, and we could rely on someone else to take care of us in retirement. Not only that, we've got Social Security that so many people depend on for retirement income, of course, and it is nice to have that Social Security, but it's not enough for most people to live anymore. And so there's this thought pattern or this habit around in our culture that someone else is going to take care of us in our old age, you know, to have money to live. There is no one else. No one is coming to save us. Yes, Social Security will probably last in my lifetime. I don't know how long beyond that it will last. I don't know. I'm not an expert in that, but I just don't know. But I also don't like the thought of relying on someone else. We didn't like the thought of relying on someone else. So there's been a transition, and there is culturally a transition from relying on someone else to creating our own wealth. And we can see this evident in the younger generations who switch jobs much more often, who are creating alternative income streams from things like rentals or Airbnb and other strategies to be in charge of their own wealth. So I think it's an important awareness to have. No one is coming, and it's our responsibility to create our own financial well-being for the rest of our life. All right, that's number 1. Number 2 is that long-term stocks and bonds at under the set asset allocation into those long-term stocks and bonds was just, no matter what, that's what we do. And now there's being a shift into more tactical investing, and here's why. Because long-term investing in stocks and bonds going into retirement can lead to extra risk with something called sequence of returns risk. And I talk about that in another video. I'll put a link to it up above so you can check that out. But basically it says that if we enter a bear market, experience a bad bear market shortly before or shortly after retirement, then your risk of running out of money based on your retirement plan, a traditional retirement plan, is higher. And so who wants that uncertainty when they're 85 years old running out of money. Nobody wants that. And so now investors are more proactive investors, savvier, more sophisticated wealth managers are being more tactical with their investment strategies. Maybe that's, buying some assets that are inflation protected or that are more tactical based on opportunities that are presenting themselves on a monthly or yearly basis, instead of just, hey, we're going to go with 60% in stocks, 40% bonds because you're this age and because you said you want this risk. That's the old way, right? And that's the way most people are still doing it. But the new way that I'm seeing in the transition, because we have more information now to make better decisions about investing, is a more tactical approach to go, wait a minute, I see there's an incredible opportunity here now, so I'm going to put some of my investment capital into that. So more of a tactical approach and more a move away from that standard asset allocation no matter what happens. All right. The third shift, this is a really good shift for us, and it's high wealth management fees versus low wealth management cost. And this is still happening a lot with retirement accounts. Some of my coaching clients, that come on board are paying over 2% wealth management fees when we first start working together, because they're not aware that these hidden fees are in their retirement accounts. A lot of 401ks have expensive fees. So there is becoming, fortunately, more of an awareness around this, and a transition to people really saying, wait a minute, I've got a lot of low cost options now, thank goodness, right? Because things are changing due to the internet and that huge shift we've seen, that disruptor over the past 2 or 3 decades, where we have options that are low cost. And that may still be with an advisor. It could be with a robo advisor, but we have other opportunities. So that's a shift from the old way is those high fees. The new way around investment strategies and investing is with lower cost strategies. That segues right into what I just touched on is 401ks and retirement accounts that have really limited options versus self-directed IRAs or other types of retirement account setups, perhaps some 401ks that have broader choices for the individual investor so that they can manage their own portfolio in a more tactical way or in a way that they want to do it. The old way is, hey, you've got these limited choices and you got to pick from these, or you're going to have to take your money out and pay taxes or pay penalties or whatever. The newer way is a shift toward being able to make more choices around your own investments and use investment strategies that are based on maybe a more tactical approach or other strategies that will increase the likelihood that you'll have money for the rest of your life. And then the last really big, it sounds really simple, but the last shift I want to share with you from this old retirement investment strategy over to this sort of new way of doing things, more innovative, is simply settling versus creating. Okay, so this goes back to someone else taking care of things for us and us being dependent on someone else. But when we do that, we have to settle, right? When we are dependent on our employer, our ex-employer, our 401k with limited choices, Social Security, whatever, we have to settle, and that's kind of what's presented to us. We have to settle for whatever that is, and maybe that's also a 4% withdrawal from our retirement account. That's sort of the traditional method now, but that's sort of settling. Whereas now we can create our own financial future. So many options are available to do this. And this is what we've done over the past 15 years by, investing into alternative investments that were ignored in traditional retirement planning. Now people can create their own financial future, even people that are older like us, whether that's tapping into their, skills that would help them, buy and manage rental properties, or starting an online business, starting a YouTube channel. Here I am. I know not everybody, most people don't want to do this, but I think it's pretty fun. Whatever it is, we all have skills that can change and create our financial future in a way that will work better for us. If you found this helpful, you'll love this video. Make sure you watch it next. Thanks for watching.